Ladies and gentlemen, welcome to the 18th episode of the Futurum Equities Podcast. It's been a while. I'm back. We are back. And it's a great time to be back because it's been a volatile type of week. But before we get into it, like, Daniel, how have you been? How's the last couple of weeks been?
Well, I mean, you haven't had a chance to talk to me, but I don't think I've been shy. So if our audience on X is watching, I think they've been hearing from me. It's funny, we have to send these messages of relief to people when you're like 3-4% off all-time highs, but like, we're seeing volatility spike. We're seeing pullbacks that are much more meaningful than 3 or 4% on some growth names. I think that euphoria, I'm the smartest investor ever because I ripped 100% on a company with no revenue in a speculative field, and you're like, holy crap! You can see how quick those gains can dissipate. It's interesting, it's fun, but I'll tell you this: on the optimism side, I am incredibly happy with what we've seen during this tech earnings wave. I really can't think of a company, maybe besides Block, and I don't even know if I consider them a tech company anymore, that didn't have a good result. I mean, the Mag 7, outstanding. The semiconductor companies, outstanding. The AI utility companies, outstanding. Like, it's just been an incredibly positive multiple, set of weeks. And, if you're long and you're still in this AI trade, it's hard to look at the actual results and not be like, I'm good. I feel good. I feel happy. And then, I'm going to keep adding. I'm going to keep playing, and I'll talk more about that later. But like, volatile days like yesterday are awesome days for making some very specific types of trades.
No, I mean, you nailed it, especially with the AI trade. But before I get into that, I mean, I think the past couple of weeks have been kind of fascinating. I know a lot of people like fascinating is the word you're using. I'm losing so much percentages of my gains, but zoom out, like I think I'm down maybe 6-7% this week, but I'm still up like significantly for the year. Like, you gotta have that kind of mentality. And I think the earnings cycle is what's kind of catching me off guard, that's not the launching pad on this next leg in the rally. I want to blame the government shutdown being prolonged the way it has been and with no end in sight as overshadowing the pure validation that we got again that the AI trade is happening, it's accelerating. And a lot of the earnings you just called out, like the Mag 7, AMD, a lot of these like AI winners have had really good prints, and it showed that there is no weakness in AI demand right now. I do think there was a component of front running the cycle a bit. I think September was explosive. I think October followed suit as well a bit, and now it was more of a timing lag where people wanted more. And AMD is actually a great example of that because I think AMD had a really solid quarter. Like, data center growth was great. I think that people, or by people, I mean investors in the market, wanted more strength from the GPU side of the business. And what carried that strong earnings print was the CPU biz. And I think that right now you're clearly getting the read on what matters for AMD, which is what we've been talking about for a long time. It's GPUs, it's data centers on the GPUs, the AI hardware ramp. And we didn't really get that kind of validation. Like, I think the people wanted 2025 to be the year for GPU acceleration to happen. I think the
For
earnings,
AMD, you mean for
yeah,
specific, right?
just
Yeah.
for AMD, yeah. And I think the AMD print we got, my takeaway was like, it's a 2026 story. It's not right now, and I think that's why it's kind of fading a bit. What's your take on AMD? I know you're very close to the company. When you talk,
Oh man, yeah. I mean, I shared this. I think there was a couple things they printed on a day that everything was red. It was just a brutal day, and we've had a couple of those where price follows sentiment and reactions follow. Where like a bunch of companies had good prints and went down. Some of them even had good prints, went up in the after hours and down the next day. We saw that with ARM. We saw that with Robinhood. Well, actually, Robinhood went on a bad day, went down and went further down, but actually it recovered in the pre-market and then went way down that next day. AMD is an interesting one because I think them and Oracle's another example, like these companies that kind of announce big deals that are kind of further into the future. got these huge boosts. I tweeted something yesterday. I said, zoom out, feel better, ? Like, you look at where AMD was, the run it made since that OpenAI announcement, then you look at where it's pulled back to, and you're like, yeah, but it's still up a lot between the announcement and where it's at today, even with that pullback. And so the GPU thing is a challenge, though. They went away from talking about their instinct numbers. You have Jensen sitting on stage talking about $500 billion in order book for rack scale systems between now and end of 26. And you have a 22% data center number growth, and that AMD is crushing it in CPU in their growth. And you could basically look at that number and say they may not actually have grown instinct numbers at all in this quarter. Like it's possible that instinct actually was flat or down. And I think a lot of it's about the MI450. I think a lot of it's about getting to that rack scale system, meaning I don't know that they're getting volume in their current generation in the MI series. But I think that's where the orders are starting to accelerate. The Oracle deal with AMD, the OpenAI deal with AMD, it comes into the future. So to your point, there's some front running. They hear about these deals, they buy into it, and they think that it's going to run. And then people kind of take a step back and they're like, well, when does this really start to hit fundamentals? And the fundamentals are further into the future. And then people are like, well, maybe I want to be invested in things where the fundamentals are better now. And we start to get the nerves. You start to get market shutdown. You start to get, are we about to hit a pullback? You get all this bubble talk. I call it Scaremageddon of Tuesday or Wednesday, whatever day that was this week. And people start going, okay, I want to reposition. I'm going to get into things that have better fundamentals. I'm going to get into defense stocks. I always say it's a really nervy sign when you see all the Mag 7 names down except Apple, because Apple is such a defensive name now. They're not a growth name. They're a defensive name. So when money starts rotating out of the other Mag 7 names and into Apple, you're like, this is if nothing else, you're seeing the scared money chasing safety right now.
Well, I also think it's you kind of broached on this a bit, but it's an Nvidia valuation problem as well, I think, for AMD, because right now AMD's for sure going to have a place in this AI economy. Like, we 100% agree they're going to have a place. We mentioned sub 10% market share in the accelerated market. Like, they're going to have a seat at the table. But are you willing to pay a premium on AMD's earnings valuation versus what you can buy Nvidia right now? Because right now, Nvidia, their PEG ratio is less than 1. That's a Peter Lynch favored metric on how you can actually track apples to apples. The valuation, current valuation, now the earnings are actually growing. If it's less than 1, it's undervalued. Right now, I think Nvidia's at 0.9. AMD, it's above a 2. That's showing, like what we just talked about, that the market's kind of front running what's going to come down the pipeline. It's going to come, but might not happen as quickly as what we got revealed this week. So now you're asking, okay, do I pay a premium on AMD when the stock has, I think, doubled in a matter of a couple months? Or do I go with the king, which is still Nvidia? Nvidia will still be the kingpin of new digital economy for probably a decade plus. That's probably like what the issue right now is on trying to buy AMD at 250, because you can buy AMD at 250. You probably will do well in a zoom out by the end of the cycle. But like, I do think Nvidia is still undervalued, and it's crazy to think that because of the run up the stock has had. But this is a perfect example on how you can't judge the stock price on if something's expensive, because multiple for Nvidia has compressed over time as the stock price has gone up because of that insane pricing power that they have. I mean, do you think that's kind of the issue with AMD stock price right now on the reaction on the earnings? Because it's just the alternative, which is Nvidia, which is the king. They're cheaper on the valuation basis.
Yeah, I mean, a lot of people did really well near term. Like I said, there's a lot of scared money, made a lot of money. They're getting out. What is the lettuce hands? But at the same time, sometimes locking in a profit's not a bad thing. I mean, that's, different investors have a different thesis about it. I hate that everything's always this sort of zero. You've heard my zero sum thing, but like, you can own AMD, but you can't own Nvidia. Or like, I'm not sure the dollars are flowing out of AMD into Nvidia. I don't know that that's what's happening. I don't have any data that suggests that for sure. But I do think when a company's made a parabolic run and then they print and you're like, crap, the AI number, the one I really was getting behind, I can't extrapolate from the data that that's growing. And then you're like, okay, crap, are they a CPU company? Is that all they are right now? Like, then you might say, look, I'm going to take some of these gains now. I'm going to, again, I got all these different external factors. I'm getting a little scared. I'm watching the TV and everybody's saying it's a bubble. Maybe I'm going to take some gains, put it on the sideline, wait for the pullback. Again, a lot of people have been doing that for like 3 or 4 years now, waiting for the pullback. But if you've really made some money, it's not a terrible thing. You do this, you pair, you take some chips down. Like I said, look at the short run that the company had in like a month and a half of growth, where sometimes you say, look, I'm happy here. I'm happy here. Let me wait and see more fundamentals and, go that route. But I mean, look, Nvidia is locked in, but you're also just seeing this diversification in the market. I call it right now, winners and growth is not necessarily entirely symbolic of great execution. Literally every company that can build anything can sell it. I don't know if you listen to like Intel's earnings. Like Intel is saying that they're selling like their Xeon data center CPUs at volumes that they above what they had expected. Meaning like just their CPUs for the data center, and they literally can't produce enough. They're backlogged on it right now, and it's literally because every company is looking to put even more efficient CPU compute into their data centers. They're trying to shrink the footprint and make more compute out of the same footprint, because all the expansion is coming in for AI footprint, right? And so they're looking to upgrade. And you've got companies like Intel there that are saying like, we can't build enough CPUs on 7 nanometer right now. Like we're literally not, and they're not going to stand up more capacity there. But you look at the AI utility names. I mean, there's a reason you spread it around, is everyone that's got a megawatt to sell will sell it right now. It's going to sell. It's like every one of these hyperscalers are going to buy up all the capacity. So what I learned for sure from this earnings cycle, and I've said this a few times, the biggest companies are not going to sit back and they're not going to wait, other than Apple. And we'll talk about that later. They're not going to sit back. They're not going to wait. They're not going to take the chance. I quote this a lot, but where Zuckerberg says, I'd rather overspend than underspend, because it is an existential risk. It is the survivability of these companies as the Mag 7 that they don't miss this inflection. Having said that, could some of them overinvest? Could there be a period of time where they've built more capacity than there is demand? It's entirely possible. But what I would say is right now, what we're seeing is that all this capacity that's stood up literally OpenAI can't even roll Sora out at scale. They can't. If they said, look, we're going to make Sora widely available for $200 a month and you can use as much capacity as you need, make videos all day long, it would break the entire compute system. They do not have enough capacity to offer their products to all the people that would want to use them right now. Then you could say, sure, that's is the AI ecosystem just videos and text generation? No, I mean, the enterprise stuff hasn't even started yet. But the point I'm making is we need so much more capacity to handle the amount of volume of tokens that are being created, whether it's the trillions on Google Gemini, whether it's OpenAI wanting to roll out its applications to scale, whether it's enterprises wanting to roll out token-based solutions with agents. We aren't even close to having enough capacity. So I think the build continues, and I think they're going to front run the revenue. I just don't think the front running is .com risk, because the speed of this transformation is so fast that even if there is this little bit of a lag, it's like months, not years.
I mean, I think that's a perfect transition to get into the AI utility bucket that we're just super bullish on. And also, spoiler alert, the DC10 list, we're going to be producing a list in the next week or so that's going to be published. Our 10 favorite names outside the Mag 7, outside this mega cap companies, of undervalued names that I think are going to be we're bullish on, that's going to be adjacent to the data center thematic. But to go off of why, to go on your original point about AI, I do think that part of it is a bit the psychology behind what's happening in the AI economy. I think people think, like you mentioned, bubble, like all these deals that we're getting, RPOs are exploding. It's not translating the fundamentals right now. People love to say bubble. Like you and I, we go on TV all the time. That's a question that happens every single time. We have to try to touch on, is AI in a bubble? It comes up every time we have a couple red days in the market. And I think again, it's because things are AI is moving at a rapid pace. Like this is one of those revolutions that's not a product oriented one. It's a characteristic change. Like all these products you're seeing are being built on top of AI. AI is not a product. It truly is intelligence, and that's going to touch every part of this world. And that's why the velocity of this theme has been so aggressive the past 3 years, and it's not going to be turned off because the government shut down for over a month, or inflation is being a little sticky, or the Fed is not going to cut rates potentially in December. It's once the ball moves, it's going to continue until the we have the necessary tools in place to fulfill AI's potential, and we're early in the decade-long build out on that. And if you don't believe Daniel and myself, just believe Jensen, believe Lisa, believe all these prominent CEOs who live and breathe AI. They're saying the same thing. We're very early.
I don't know.
But
I think some person that has like a picture of their dog as a avatar. I call them avatars. I think that person that probably has a $12 short position that read a back page opinion piece somewhere in like their local town newspaper about the AI didn't transform their local garbage waste disposal company. That person probably knows more than all these CEOs. I'm 100% sure that person knows more. And by the way, after they said something mean to me, I shut my account down, closed my companies. I'm going to take a job as a barista at Starbucks. Yeah.
The ultimate response. Yeah, 100%. I mean,
Yeah.
let's
Done.
let's get into CIFR though. I mean, we took a couple weeks off of this. CIFR reported. What was your takeaway from that? I know
only better AI utility report was probably IREN Limited. I mean, CIFR did the business. I mean, one is such a bullish outlook, added a deal, announced a deal, and not Black Pearl, meaning there's still another deal likely in its future. And this is such a simple thesis for me. It's every bit of capacity it can build, it's going to sell. It is aligning itself to the biggest cloud providers on the planet. You have, Google through FluidStack. They've expanded with AWS. And it's going to keep going, right? I mean, Microsoft will likely come. It would be my guess, because every one of these companies, like I said, is they're not taking the risk of not having the capacity. When Sam's entire quote unquote the philosophical bubble will burst is when Sam can't get enough compute. I have this great story. I was at Bill McDermott's CEO summit. I can't say who, but I had a lot of great conversations. There were a lot of investors there, funds and different money. And I had a couple of conversations with people actually in OpenAI. And, these people invested in it, over $250 trillion dollar valuations. And, I asked a really simple question. I said, is there any valuation in which there's not more capital chasing the opportunity to be involved with OpenAI than there is, where there's not more capital to chase this than there, and the bottom line answer I got from the investors is it's so oversubscribed. There's so many investors that want to be in on this, that this thing can keep going up. Because the way that the thing continues to get funded is it continues to raise money. It has to keep funding all these obligations, and it can keep raising money. And it will be $1 trillion IPO. Mostly because even if you don't believe in the actual business, all the money behind this thing, they're not going to let it lose. You're talking about the biggest, most important funds, money, and investors on the planet. They're in this thing that have come in at a $500 billion, $500 billion. Do you think they're just going to be like, yeah, we'll just let this thing collapse? No way. There's going to be more money to keep chasing this thing up, and that's going to give Sam the time he needs to grow.
So question for you. Do you think that OpenAI will eventually create an Azure, AWS, Google Cloud competing product, like a cloud service provider?
I think it's setting itself up to be a hyperscaler. Absolutely. I've said this before. Why else would it want to have all of this compute?
Exactly.
It does not make any sense to me. Their bet is that they're going to be the app stack, the social stack, the ad stack, maybe the chip stack. I mean, they're going to make their own chips. They're going to build their own data centers. They're going to have their own applications. And by the way, you can always see them moving in the direction of business applications. They're partnering with enterprise companies to do enterprise things, because they know in the future the abstraction is going to be interacting with chat, and all the data again becomes this deprecated, accessible, governed, compliant, trusted layer. But it's able to navigate that. It doesn't need these specialized SaaS platforms. it's going to know what it's allowed to look at, what it's not allowed to look at. It's going to know what it's allowed to present and to who. It's going to be completely contextually aware, semantic, and intelligent. And it's going to have the opportunity, like Sam's diabolical. I've said this a million times, but his belief is that one app can rule them all. This is like Evil Corp in Mr. Robot. I mean, you have to see it for what it is. So then the question is, how do you make money?
Yeah. And I do think that part of the equation, people are underestimating how not easy, but how a flip of a switch, he could stop the bleeding once he gets all the compute necessary. Because right now he's just like the Zuck mentality. I'll just get as much compute as necessary because I know AI is real. It's only going to increase. I just know I need as much compute, all the tools necessary to do whatever product down the line for AI. I do have another question for you because I do have somewhat.
By the way, I know that was only a very limited answer about CIFR, but my thesis on CIFR is just super simple. It's just they're a capacity play. Like, will they even like IREN is trying to go full stack, and their challenge is going to be the costs required to build the expertise to be able to deliver, because they kind of want to be a combination of CIFR and CoreWeave. They want to be both, and like that's cool, and that's a really exciting with a lot of upside. CIFR's thesis is a little simpler. They're just going to basically give the energy, power, and the facility, and let the people that know how to run the data centers run the data center, and like that's a different thesis. And I think that's an easier play for these companies. So it's less risk, but there's also less upside.
Well, IREN is more vertical integration. Before I get to IREN, though, like, because I do think
I was just pulling that out, though. I just want to, I didn't. You asked me about CIFR, and I barely on it. So
I should give my 2 cents on CIFR as well. There's just so much we have to talk about. Like taking a couple weeks off, like in the way things are, the news flow is happening. It's just too much. But anyway, yeah, I mean, CIFR, like you mentioned, it's a simple thesis. I think that, again, if you want to know the differences between CIFR and IREN, NBIS, I view CIFR as more of the landlord of the physical layer of AI. The AI utility landlord is how I call them. And we got some glimpses this earnings cycle of like why that is and why they're catching a bid, because what we got from big tech from this earnings cycle is every single one of them, like not one of them didn't touch on this, is that AI infrastructure demand is accelerating, and CIFR's earnings report showed us exactly where the demand is landing a bit. It's in power, it's in land, it's in the interconnect rights that are the new choke points. So CIFR controls the sites, they have the tenants, they also have the financing recipe, which is exactly why we saw that AWS deal, and what we're seeing on the Google deal, and we're probably going to see Microsoft, like these hyperscalers. Like, it's not any kind of loyalty, like, oh, I did it with Google, I can't do it with the rest. Like, it's a full-on party. Get as much as you can. I think that right now we got glimpses in the CIFR's earnings report of that 2026 ramp, and they can, even if they convert a small slice of that 3 gigawatt pipeline into additional leases, you're going to be underwriting a utility style landlord that sells compute instead of electrons. And for IREN, I think IREN was kind of adjacent to what I just talked about for CIFR. I think they're much more, they show what the vertical integration can do. I think all the fundamentals that you're seeing right now is just, I don't really care about it. I view it as pre-revenue because the reason I'm buying it isn't because of the number, the revenue they're reporting right now, or the EBITDA. It's purely on what's coming down the pipeline, like that Microsoft deal. Like, I think that Microsoft deal changed a lot for IREN. And I think it's the beginning of multiple deals like that, where that 5-year contract, I think it was around $2 billion in ARR once fully ramped, with margins near 85%. I do think that it showed what makes IREN special, because they own every layer of that stack, from the power substations to the GPU itself. And that's why they have higher margins than a lot of their peers. And I do think that the build quality matters, and that's what makes IREN very special. And I think that's much, their data center leases are a lot stronger than a lot of their peers because of the setup that they have. They have a lot more upside in the AI compute itself. And I do think that with the data centers, like, side still gets paid steady rent. They get the best of both models with a stable base plus real growth leverage from everything else that they have. But I want to get back to big tech, because I do think as a shareholder of Amazon and a new one in Meta, I've been building my Meta position. I think 2025 is the year of not many opportunities are undervalued in AI infrastructure. Meta is definitely one of them. Do you think being a CSP is going to become a commodity down the line because everyone's just getting all this compute like Meta, OpenAI. Eventually, once you have all these tools, is the barrier of entry of just having your own cloud service provider, I feel like is going to diminish as time goes on. Is that just me being very green, being a young schmuck, or do you think that is somewhat of a concern that CSPs will be a commodity in 5-10 years?
I think if all you're providing is bare metal, you're at risk. There's so many companies standing up bare metal infrastructure and just saying, "Hey, here's some compute. Do with it what you will." I mean, the value of these big cloud companies is they've built so much of the, uh, the sort of the control layer, the development layer. They've built the governance layers and the compliance layers. Like as companies have tried to roll cloud out at scale, you can't just be like, "Oh, I'm just gonna build all my applications and just pour them to the cloud." You got to secure them. You got to be able to continually maintain them. You have to be able to handle them. Like you saw what happened when AWS went down. You got to be able to build resiliency for regionality and scale, so that these companies provide a lot of the tools. So it's the marketplaces that allow you to connect all of the applications and run all the different applications in those clouds. It's having the compute and the workloads refactored appropriately for your individual applications and use cases. So there's so much to be done. But like I said, if all you're offering is like, "Hey, here's some GPUs, do what you will with them," I think that's going to get more
Mhm.
and more commoditized. This is why I think the thesis on like a Nebius is well liked versus even like a CoreWeave is a lot of people see Nebius as sort of building more of a toolbox for your enterprises to develop AI in the cloud at scale. And of course, this is what the hyperscalers are doing. I mean, Azure services, AWS, SageMaker, and all their ML tools for scale. And of course, like I said, Google, the entire Gemini stack, super vertically integrated. I love Google. I actually said the other day I picked Microsoft as my AI pick only because it sold so hard off earnings and their earnings were so good. But like Google finally has gotten its respect. I mean, it's finally priced where it seems somewhat fair, where it's valuated at after being just beaten up unfairly for so long. But no, I mean, these companies they're not commodities. And by the way, building this stuff, standing it up, wiring it up, integrating it, making it available, keeping it, maintaining it, that stuff's hard. There's a
Mhm.
reason that IT wanted cloud. There's a reason that IT went to cloud at such scale. Is this is not easy. This is not easy to do. So, and then of course, having the operating leverage, like the operating leverage to build data centers is incredible. The reason I don't see the bubble the same way as like the internet is these companies and their balance sheets and their cash positions and their cash machines, they're able to take real cash flow from real products and services and real businesses that are very stable and reinvest them into growth. Now, having said that, like cash flow is going to be a challenge, but you see the raising debt. Do you see Meta raised money? Do you see it? What oversubscription level that people had that would be willing to buy bonds from Meta? I mean, these companies are so good, they're so reliable, they're so predictable that this is seen as probably more investment grade at this point than T-bills. I mean, this is
I
well, I'm serious. Like
mean, it's true.
this is a great way to park money and know that you're going to be safe because nothing, you know, Meta's not going anywhere. So your question's partially right. I think a lot of people are just standing up bare metal. That's going to become more and more commoditized. But I think in time, these companies are going to either figure out are going to have value added services on top of this infrastructure, or it's not going to happen.
So our producer let us know there's a ton of, first off, great. Maybe we should do the 6 a.m. slot more or 9 a.m. Eastern slot more because this is definitely humming right now a bit. I'm looking at the stock right open. Again, this is one of our first times doing a pod. What the open, most volatile
This was
time.
your time for a long time, by the way, with the rip, right?
Yeah, it was. It was. Now the hiatus has opened doors for new possibilities. So we're seeing IREN is down 7% at the open. It's at $62. I do think that's more symbolic on the risk off environment than specific bad earnings on IREN because I'm also seeing Tesla's down 4%. I really would not assume that would be the case with Elon winning this $1 trillion package. Essentially, opening the doors of that $9 trillion valuation that is the only way I think he gets paid that 1 trill, which is bonkers, guys. I totally get it's freaking bonkers to pay someone that much money, but he is Tesla. Like, if he didn't win yesterday, I would liquidate my position. I don't want to. I don't want to be a Tesla shareholder without Elon. He is Tesla. Like, I'm not buying this company as an EV automaker. It's buying it for Optimus, for FSD autonomy. So I do think that was a sell the news events a bit right now. You're clearly seeing that. Q's. What's interesting right now is you and I feel this because we're very much growth investors. A lot of names are experiencing, they're in a bear market. Let's just say that. There's 20% plus correction. The indices are down 3 or 4%. Like, everything else is just the hood is just getting just destroyed a bit in a very quick amount of time.
Well, yeah. I mean, Robinhood goes up 300% and then it pulls back 20%. Now it's only up, 240%. It's okay. Like, that's why I said zoom out. Like, trust me, I liked my portfolio better a couple of days ago. It looked better a couple of days ago, but like, I also could go back to April and look at where it was then. And, you kind of look at the whole situation. I mean, I think we've been spoiled. I just think we've been spoiled in the recent times, where the market just goes up, 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 and every down day has been bounced hard. And by the way, like, I wouldn't be surprised to see us, get a kind of a hard sell morning with a bounce today, like, because that's what it's done. That's historically what's been happening. But there's a chance it'll go down 2 days in a row. Like, we really haven't had like a hard 2 days of selling in a long time. And then the question is, you got to kind of like, shoot the vice into your veins, the fluid in your veins, and say, remember how I got here was in April on Liberation Day. Who was buying? Who was willing to actually buy in that moment when shit was selling hard? Because that's where a lot of gains were made. I mean, that's where the gains are always made. It's like we chase because it's like euphoric. It's like stepping up to the craps table when someone's been on like a 15 throw heater and everybody's crushing it and making money. And then you come up to the table and you see everyone's cheering. You put your money down, you go in big, and then first roll, the person craps out. I mean, that is the game that's being played right now. Remember Trump, the Trump tweet, I don't know if it's real or it's fake, but the no crying in the casino, I shared that yesterday. There's no crying in the casino. Like, you have to understand that these pullbacks, and I think you've said it well, but like, markets have to be efficient. They can't go up only in one direction forever. Like, there has to be consolidation. There has to be gap filling. There has to be money taken down. The pricing has to come back. And like I said, these are as much reminders to myself as anything else, because like I said, I don't like these days either, but I do remember, like, deep down, like, it's never been a straight ride up. It's not a straight ride up.
Well, I think, again, I'm only 32 years old. I haven't experienced too many cycles, but I do think I've experienced 2 really quick bear markets, like you mentioned, V-shaped recoveries, but like, those were some explosive bear markets in 2020, bubbles bursting. And I think that I learned a lot of lessons from that. And some of the lessons I learned was more psychology and how I need to dictate moments like this, like weeks like this. Like, the feeling in your, like, when you open your portfolio and you see red, not just red, like you're seeing your portfolio down 10% amount of days, for example, you instantly feel threats. Like, you instantly feel like defensive. The feeling in your brain that governs fear and survival instinct starts to kick in, just like if you were in some kind of physical danger in real life. Like, there is adjacent feelings on seeing you bleed your portfolio and having a physical danger in real life, just in the way your heart races, your stomach tightens, and also like the way you start rambling in your head, spiraling in your head. But I do want to call out, though, your immediate reaction is to relieve that tension and try to feel safe again. And in order to do that, a lot of people will sell on any kind of initial pain. I think the market is clearly meant to exploit that reflex. And that's why I keep highlighting, or you and I keep trying to do like these caution posts out here on Twitter, because everyone is like, the bears come out whenever there's a couple red days and they scare a lot of retail out of their high conviction positions, that if they just literally turn the screen off and just like, everything's gonna be fine, they would be much higher as time goes on, because the AI trade is so early. AI cycle is very, very early in the build out of it. But I do think emotional exits happen at times like this, and that creates entry points for someone like you and myself that understands that volatility is not a signal to run. It's actually an invitation to start accumulating. And you are not like, I love adding in red days like that. Like today, like after this stream, I'm probably gonna start adding. I'm looking at these like metas at 607 now. It's crazy. Like we're getting opportunities right now. So I'm accumulating. Like VIX is above 20. I love that. I hate it when we're at all-time highs every week. And I think that's kind of where that's where outperformance happens. It's when you buy into the fear.
There's not much, like I haven't done much buying except for things that were going the wrong way. Like I did a lot of Viking after that nonsense sell-off on its,
Oh my God.
on its phase 2. But I'm saying like, so where I've been adding in this process are like, HIMS has been really beaten up. And by the way, I don't always just buy common, I do a lot of options. Like yesterday I sold puts on SoFi, I sold puts on HIMS, I sold puts on CIFR. Because on that volatility spike, I'm like, well, if it does go back to 15, I'll buy a lot more. And if it doesn't, which is what's been happening, I'll collect premiums. But like, there's different kinds of trades you can play on the vol. And so I do that. But I have not really played much with the things that are way up. Like the only one is like, for me has been CIFR because I'm just such a believer in that thesis right now of the AI utility trade. But like overall, there's scared, there's shakeout, and then there's the pragmatic of it. Like we don't have great data, we don't have job data, we don't have an open government right now. We have concerns about healthcare, we have concerns about consumer, we have concerns about airports shutting down, transportation starting to get whacked. Like I think that is influencing the market right now. I think that's influencing in a meaningful way. I do think you'll get a pretty nice bounce when you hear that there's a deal struck to reopen the government. But yeah, I mean, look, seeing, because like you said, the market might be down 3 or 4%, but I'm probably down 20 from the high in a couple of days. That's a lot. I mean, that's a lot. That's meaningful. But again, I don't really sell anything. So it's like, I'm not using it to pay my bills,
Well, I also think everyone's different. Like I do think like for you and I specifically, like we could infuse cash through a DCA plan. If you have a fixed portfolio, I think I've been very vocal about this as well. You should raise a 15% cash cushion, especially when we hit all-time highs. Like just have that dry powder necessary, because right now I think this pullback we're experiencing in the market, it's purely macro driven. It's nothing with the thesis that the AI cycle is maturing. I think that it is pure nonsense if you hear that. This is purely on government shutdown is the longest in history. That looks like it's going to continue. And earnings wasn't the saving grace to overshadow that macro narrative. And now people are profit taking. Like that's end of the day, look at this year's performance. Like people are
if you turned on like the media, like CNBC on like Tuesday this week, it was scare me. Like everything was the world ending. Every guest that came on was, it's a bubble, it's about to burst, everything's about to get bad. I mean, if I was sitting there watching that stuff, that's like nauseatingly negative. And then, like I said, you might say, okay, I got to get a cash. I got to de-risk. And by the way, like that's okay. I mean, like you said, different people, different reasons. I don't like dealing with the tax treatment all the time. So it's like, I'd rather wait, accumulate, like I said, play with options on the down to add value to my positions if it comes all the way back. And I've been through 22. Like I had growth stocks that went down 80%, including SoFi. I mean, SoFi just came out of a rule of 50 plus print. Amazing quarter, amazing growth story, raised its guidance, raised its EPS forecast, probably has an S&P inclusion in the next year in its future. And it's down 20% in 2 days. Why? I mean, nothing has changed. And by the way, that's the entire reason I can stay positioned is I'm looking at the performance of the companies. I'm looking at Robinhood, record results. I'm looking at, the Mag 7 names, record results. I'm looking at the demand for Nvidia, record demand. I'm looking at the demand for capacity. You can't buy a turbine right now. You can't get power. You can't cool the racks enough. Like all these things are true. So, unless the whole thing implodes, and, I'm not going to say it's a zero probability. I think that's the wrong belief. I'm very bullish. I'm very optimistic, but the probability in my eyes is very low single digits that this thing completely blows up. Okay. And more realistically, we will get a really meaningful rip your face off bear market for some period of time. That will be a great market maker switch opportunity for them to go short and then go long and ride the thing back up. And, you'll have to decide, do you want to sell on the way down? Do you want to try to find that re-entry point? Do you want to try to catch the falling knife? Like, what do you want to do? But Shy, like, I sat I would listen to almost every earnings call. I listened, to all the Mag 7s. I listened to all the chip makers. I've spent time with the CEOs of most of these companies. Like, they're all betting big. Like, none of them are turning the switch off. Every one of them raised their CapEx forecast. Like, this is very real in terms of its growth, but it's a great way to keep people scared, And the funny thing, by the way, is like, I don't know about you, but I'm in crypto. So like, none of this volatility is very much. Like, I've literally gone from like Solana, where I'm at 250 on Friday and like 160 on Monday. Like, I've seen like, 30-40% selling in like days. And so, you know what I've done? I've bought every week. I buy Solana every week. I buy Ethereum every week. I just buy it. I just buy it every week because I know it's going to do this and then it's going to go down. And it's going to come. It's like, I know what's going to happen. I don't know exactly when, but like I said, we're not, this is not financial advice for what anyone else that's listening here does. This is how we think about it. But also that's why I don't really trade. I just don't really trade. Like, I invest. Like, I really do look at these as companies I want to own. So the companies I'm buying, I may hold them forever. I really do. Like, I could see myself literally borrowing against my portfolio when I'm 80 years old because my SoFi position's gotten so large. I'm never going to take that income. I'm just going to freaking, pay, because the interest on the borrowing on the account's a lot cheaper than tax.
That's a good point. I do also, it's a great point. I also do want to touch on our last topic that could be a coincidence on why the AI trade is pulling back. I don't think it's the catalyst, but let's just talk about it. The Michael Burry short 2.0. I think it caused a lot of media to cover it, that Michael Burry opened some puts on Nvidia and Palantir, and clearly that's symbolic of him thinking the AI boom has peaked. Again, if you guys listen to this pod today, Daniel and I disagree with this. And I think that for me specifically, I'll provide my 2 cents on it before I pass it to Daniel. Is I think he's clearly which a lot of investors do. I think he's fighting a inevitable S curve that we're seeing right now in AI with a value investor mindset. He's viewing it with the lens of, that's not how you engineer deals. This is not how multiples should be trading at. This is not how all these things should be had, because he's using the old economy mentality when we truly are. AI is going to be changing every part of this world. We're going to be entering a new digital economy that's permanent. So I think, like I mentioned, we're still in the early innings of this biggest industrial build out since the internet. It's far greater than that. And we're still seeing the king of AI, Nvidia, selling out every GPU cycle before production even catches up. And the next reiteration occurs after that, the newest latest GPU. And then we also just had Palantir report the biggest jump in company history in revenue since going public. That is a bonkers stat, just based on the fact that it's a $500 billion company, and at the revenue scale they have right now, is when they produce the biggest revenue jump in public company history.
Revenue by growth or revenue by dollar growth?
What by growth, revenue percentage. So 63%. They've never reported higher revenue growth, and they did that with 50% operating margins. You don't short these two companies when you're clearly getting signs that things aren't slowing down; they're accelerating. So I think right now, shorting Nvidia, shorting Palantir, it assumes that the AI cycle is maturing. But from what we're seeing on the earnings call, what we're hearing from CEOs, demand's insatiable. Like, it's not going away. And I do think that we're just getting started in early innings of build out. Shorting it is far riskier, in my opinion, than just participating in the AI cycle. What's your take on
the people that make money shorting? They're like the miserable sons of bitches that show up at that same craps table and play the don't pass line in the middle of the heater. Like, they do get it right eventually. They do win eventually. It's not the worst bet in the market. It's just not the bet I would make. Burry he's a brilliant guy. Like, no question, he's a brilliant guy. Like, but they made a movie about the situation, and he's gotten infamy for making a call on a housing market bubble, which, by the way, was a liquidity bubble, which was an issue among consumers in the middle of a growing financial crisis where there was a real fraud going on, like actual fraud in the market. Like, loans were being made to people that shouldn't actually been able to get loans. And, you could see he followed some logic and made a big bet. By the way, he had a lot of pain before that bet paid off. But he's not a tech expert. He's not an AI expert. He's not, he's basically standing up and, at the top of the hill, flexing his muscles like I do on X, and saying that, like, I know more about the future than the US government, than the Chinese government, which, by the way, are both fighting mostly about AI. Most of the fight is about AI, but they want to control the world. And that's what's going to control the world. They know more than Satya, that he knows more than Sundar, he knows more than Jensen, he knows more than Lisa, he knows more than Mark Zuckerberg. He is the smartest guy ever to exist in the world, because that's what shorts are. They're always the smartest people on the planet. But like I said, they also can be right for a minute and then be really, really wrong. So if they can be right for their moment and drag you along in that moment, it's the same thing we saw at the quantum bubble right now. It's like, yeah, I mean, look, and by the way, let's just talk about like the Palantir or the quantum or any of them. Like, you can have exuberance and little bubbles inside of something and not be a bubble. And when I say it's not a bubble, I'm not saying that there's not like Palantir's valuation could be in a bubble. And by the way, that doesn't mean in a year or two, it's not totally worth where it's trading at today. Because that's what their peg and growth is showing. Like, they will be worth this much. But the fact is when you get this far out in front of that potential growth, sometimes you have to say there's going to be this volatility, because it's a little cult-like. The reason it's run so much is it's a little cult-like. Like, people want to be positioned early in these things because they don't want to be positioned late in these things. Like, you look at quantum, like, when does quantum become relevant? When does it become meaningful in revenue and growth and profits? And by the way, in terms of like the economy and national security, because when that inflection happens, Shy, it's not going to be, INQ at 50. It's going to be INQ at like 300. It might be, but it could be here for years from now. But it's like, do I want to buy it now with the risk of it going back to 20 because I believe it'll get to 300? Or do I want to wait till it's 300 to enter? Like, those are the questions that people have to ask. And, what you don't get is you don't get parabolic moves buying indices. You don't even get parabolic moves buying Mag 7 companies. So these people, we can call ourselves Shy. We can be honest about it with ourselves. We are a little bit like degenerate gamblers. The reason I always go long on degeneracy is because we are all a little bit like, I'm what, 250%. Well, at least I was like on SoFi year to date. Like, at one point when it hit the top of it, I'm like, I'm up Robinhood 300%. And it's like, I could have, if I just put that money into a mutual fund or an ETF, or, what would it be up 10%, 20%, even if it's ripping 30%? Like, you literally made 3 to 5, 6, 7 times more money. So there's no crying in the casino when you've made 7x your money and then you lose 30 or 40% of that in a short period of time. If you want to keep your gains, you got to sell. That's all it is. But if you want to compound and you want to do better, you have to look at pullbacks, stick with your convictions, add in those pullback moments and your convictions. Because like I said, if I'd have, quick story, I know I'm rambling a bit, but like with SoFi, like, I bought a bunch of it early on after IPOE at like $18 to $23. And if I'd have stopped my position there and said, I'm going to wait for it to grow, I would have 10% of the position I have now. So I literally dealt with fuckery for 3 years on that name. Great growth, great earnings, great results, short, 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 short. It was absolutely in a spiral. It didn't matter how well it performed. And what I'm saying is, but my thesis and conviction never changed. Now, again, everybody's individual position, cash, liquidity, risk tolerance, all those things are different for different people. But the conviction was the thing that kept me in it. And I kept buying it on the way down and the way down and the way down. And, I 10x my position. And by the way, I dollar cost average down like more than half. I'm under like $9. So if you kind of look at how all these things play out, there's a lot of decisions you have to make in that process. But what is the old Warren Buffett quote? The market, rewards patience. It's the moves money from the impatient investor to the patient investor.
No, I mean, no, emotional endurance is the most undervalued trait for a successful investor. I think you experienced that with those 3 years of being a SoFi investor, just the beat down. But going off of Palantir real quick, I do want to, again, it's my top 3 position of mine. I've got in below $10.
Yeah.
Like,
hope I didn't break your heart by saying it could be,
no.
Because I love Alex Karp and I'm a huge believer. I just want to point that out. Like, I just mean like 300 times forward's a lot. It's a high valuation.
No, I was just about to say, like, it trades rich. Like, but like you were mentioning before, like, in 2 years, it could be worth this much still, even if the valuation is extended. Like, because Palantir is truly the only pure play right now that you can invest in that leverages every dollar you're seeing all these hyperscalers spend. And so it's in a way like you're not paying for today's revenue clearly because they're at over 100 times price to sales at a $500 billion market cap, but you're just paying for the right to own the switchboard that really orchestrates these trillions of dollars that we're seeing right now in the AI cycle that will only continue. So that's why it really valuation has not been a factor really in Palantir stock. But if you look at Tesla in 2021, that's why I want to pull this up a bit. That's when the I don't know, the EV moment happened for Tesla, Elon. Like he actually produced this at scale and he's not going to be bleeding money. Like that's why it ran up from, I don't know, was it $40 to 400? It 10x. But guess what? Demand vacuum. A lot of assumptions are going to be had in 2021 at Tesla at $400, and it just was on a 4-year range bound. Even though the business clearly they pivoted during that time, but it went through a digestion period after going up 10x. That is so healthy. Like a lot of times you don't want a company 10xing every couple of years. There needs to be a digestion period. I don't know Palantir's digestion period is right now, but it absolutely could be. Maybe they're trapped between 180 to 250 for half a decade. That could be the case. But it's hard for me not to believe this is not going to be a $1 trillion company by the end of this AI cycle. So that's why for me, like I already
I put it
sold
in a
all.
trillion before OpenAI. For sure.
Perfect example. No, it is though.
Yeah,
Like
no, better company.
It's true. But again, like if you don't own Palantir right now, there's better opportunities out there for your dollar, because this is me talking from someone who's sorry, trimmed their risk already. It's only profit sitting there, and I just think they're going to be a $1 trillion company. So I don't have to worry about it because my cost basis is just so much lower that I don't have to worry about the valuation gravity. For new investors, there's better opportunities out there, like Meta, for example. Meta is trading at under 20 times forward earnings. This is with that Zuckerberg having a blank check essentially in CapEx, and Reality Labs is still such a shit show that that's not going to produce anything in the near term. They're still becoming such a cash cow right now that trading at under 20 times earnings, that once they flip the switch of, all right, we have all the compute necessary, we can start fulfilling our AI roadmap. You saw historically what happens to that stock when that occurs. Like Meta is one of the few names out there that they can flip a switch and immediately start printing cash at a rapid pace. It was 2022, I think it was last time Zuckerberg did that. And I think Meta, again, that's where I'm kind of putting all my chips in a bit, where I'm adding on this dip is I would love more blood in the water on the AI utility names. I would love more I will love Nebius in 80s. I would love IREN in the 40s. I would love these names if there's actually more capitulation in these names, because I do think there's going to be more capitulation if the risk off environment stays. But in the meantime, I think Meta under 20 times earnings, when they're the past 10 years, their medium multiple is 24 times earnings. That shows to me they're 20% discounted. I'm adding there.
Yeah. And I mean, the bigger thing is like that company has the customer client base. They have the daily users. They have the ability to monetize. And you know, a lot of people, that money that's been invested in their lab, they're like, oh, it hasn't returned anything yet. It's like, yeah, you just hired all these people. It's like, you think they built Rome in a day. It just doesn't happen that fast. I do want to call out a potential correction on my side. Someone did point out to me that the $5.5 billion, I believe it was 5.5. The CIFR one is Black Pearl, or is the Pearl site. So I might have had that wrong. So always owning my mistakes. I called it. You know, I can't. You know, I've literally had 100 earnings calls. So I do sometimes try to do a lot of this by memory. You know, and hopefully. And I also want to say, like, it's been an awesome day. Like, so many great comments. You know, we're not really a platform that's going to be like interacting a ton in the real time in the stream for all you, but I was reading a lot of them, some really smart stuff. So I do appreciate the community. Like, it's cool that we're building such a great community, and I do want everyone to know, like, we do have this on YouTube. So if you like tune in and want the rest of it, we're going to be building over there too. So just a couple that were worth pointing out, like, go check out Futurum Equities over there, because we'll have shorts, we'll have clips, shows will be available, on time and your time. And then of course on Spotify, on Apple, so if you can't catch us in real time, we're going to try to do this every week. Shai's going to try to work for a couple weeks straight, and we're going to try to do this.
Yeah. And who knows? Maybe we'll do some spinoffs where it's purely on YouTube. Like maybe that's like incentivize the YouTube subscribers. Anyway,
Long.
we're at the
I love it.
We're at the end of the episode. I hope you guys enjoyed it just as much as we did. It's been a 3-week hiatus. We're back, baby. We're doing it every single week. Again, if you're experiencing pain this week, that's affecting sleep, deleverage yourself, turn the screens off, go touch some grass. Enjoy that weekend because things might get worse, but we need the government to stop being shut down. And just know the AI trade is still happening. It's still humming. And next week's earnings, we got earnings still next week. I think.
Oh, by the way, November 19th is Nvidia. November 19th. So the Super Bowl of quarterly earnings still hasn't even happened yet. So
I think that might be the saving. Maybe the market bleeds until then. Maybe, but
no. I mean, there's only so much blood. No, I'm kidding. It could bleed for a while. I don't know. If I knew for sure, I would do some things. Only our politicians know for sure, and a few insiders, the ones that are truly making the market makers. I think they know. But like other than that, the rest of us, we're just doing our best. But dude, AI so strong.
Mm-hmm.
Like I've had so many conversations. So for people out there, like, nothing about this thesis has changed. It's great headlines. 2 best headlines right now are Bubble and X is competing with Nvidia. Those are the 2 best headlines that really I don't think are ever very much have very much truth to them.
Yeah, exactly. So, all right, tune in next week, guys. Enjoy your weekend. We are off.
Bye-bye.